In this video, I'm going to talk about how you can save money on your taxes. That's right, on your taxes. Stick around to the end because I got a bonus for you. Welcome to the Learn Podcast, where first you learn, then we drop the L, and then you earn. I'm your host, Dean the Wealth Coach. I've been speaking to a couple of people about their business, and what I notice is they're not claiming everything that they can claim on their taxes. You need to know the difference between filing your taxes as an individual and filing your taxes as a business. When you file your taxes as an individual, you get taxed on the amount of money that you have made for the year. So what they do is they take away all your deductions. You pay the taxes to the government, or the first portion of the taxes. So that's the government tax, unemployment insurance, and your pension. Those come right off the top. Now, when you file your taxes at the end of the year, you have to take a grand total of how much you made for the year, and they do the deductions, and then you get taxed on that. Now, the sweet part about having a business, you don't get taxed on the amount of money you make. You get taxed on what you have left after what you spent on in your business. So how that works is, if you are a truck driver and you make $10,000 a month, and you own the truck, you're an owner operator, you get to deduct your insurance, your truck payments, maintenance, whatever was associated with that vehicle. You deduct that first, and then whatever you have left, that is what you report as income, which then will be taxed. So if your expenses are about like $5,000, then $5,000 comes off of the amount that you paid or that you made, which was $10,000. So now you're only paying taxes on $5,000. So that's how it works when it comes to personal and business taxes. You get taxed after your expenses. So I want to give you guys a few expenses that you guys can claim on your tax return if you are unsure of this. So the first is your home office expense. And when I mean home office, it can't be a space that you're renting because it's subjective at that point. But if you own your home, you can take a portion of that or your office space and claim that on your tax return. So it would be, say you have a 4-bedroom house, you would take the bedroom that you use as your office as a space that you use to make money. So that you would be a deduction for you. The deduction would be your mortgage interest, your utilities, whatever office supplies you purchase for it or upgrades you have to do to that specific area in order to conduct your work. Also, property taxes, another thing that would be included. I don't know why I need this book here. Another deduction a lot of people sleep on is travel expense. And this is a hack for you guys. If you're going on vacation and you conduct business while on vacation, that can now be considered a write-off because you did business in a different country. But you want to make sure you have some sort of documentation just in case you get audited by the government. So let's say, for example, you go on a trip to, say, the Bahamas, and you end up speaking to a real estate agent about purchasing an Airbnb, doing some research on it. That can qualify as a business trip because you're looking to conduct business in another country. So your flight can get written off, the meals, a portion of the meals, your stay, your accommodation. Those are things that you can now potentially write off because you were trying to conduct, or you did conduct business in another country or on vacation. Business supply and equipment. A lot of people, you may be guilty of this too, where you're not getting receipts or you're using your personal bank account to run your business account. You can't do that. You need to have a separate account for your personal and your business so that everything just stays clean. Even if you're buying a pack of gum and you're on the clock, that's a write-off. That's something that you can deduct from the amount of money that you make. All down to your bank fees, whatever you're being charged to run your business. That's stuff that you can write off. Far too often I see people not including this on their their tax return when filing their tax return. Anything that is associated with your business, you can write off. If you have two cell phones, one for personal, one for business, one can be written off under the business. If you have a vehicle, that can also be written off under the business. Professional fees, whatever it is that you're paying to generate money, is considered a write-off. And a lot of people, when it comes to, like, say you purchase a new desk for your home office, that's a write-off. If you have to purchase a uniform for work, that's definitely a write-off. Advertising and promotions, whatever you spend a dollar, I'm going to continuously say this throughout the podcast, whatever you spend money on when it comes to advertising and promotion, that's a write-off. So content creators, if you're paying for a photo shoot, someone to do your makeup, you're paying for wardrobe, those are all expenses you can now write off. If you're unsure of what you can write off, check with your government. They usually have a website that you can go to. You type in taxes and find out the write-offs that you can do for the business, or reach out to a tax professional. If you do not have a tax professional, I'm speaking to my Canadians, hit me up. I'll give you a great accountant that I use. So going back to the content creators, makeup, if you're doing a publicity photo shoot, if you're traveling with a camera crew, those are all things that you can write off. Great thing is, there's also grants that you can get money for to afford these services. One thing you need to know is, if you do get grant money, that is considered revenue that you're receiving, because you didn't earn the money, or you earned it by applying for it, but you didn't, it's not considered to be like a deductible, or you just don't have to pay any taxes on it. You're given money to earn more money, so therefore you have to claim it as income. That's one thing a lot of people don't know when it comes to grants. Like, they had to be like, oh, I got 100,000 in grants. Yeah, 100,000 now you have to claim as income on your tax return. Cost of repairs, alteration, cleaning of clothes used for specifically self-employment. So if you have a uniform, let's say you're a painter, whatever you have to get cleaned or dry cleaned, whatever it may be, like your uniform has to get cleaned, that's an expense you can write off. If you're unsure, always ask. It doesn't hurt to ask. And with this being said, with all the tax stuff or the business stuff, this week is going to be focused on business, just business. Yeah, it's going to be focusing around business. So if you have a business, or you're looking to start a business, you have a question, leave a comment below and I will definitely make a video about your question. Also, don't forget to subscribe to the channel. Next, you have professional fees. So if you have a lawyer, you paid an accountant, any professional service that you used, you now can pay or deduct that from your tax return. Or not your tax return, sorry. Deduct that from the income that you made, that you're reporting for your tax return. What else is there that you can claim? Self-improvement. So another thing that you guys need to know is the difference between self-employment and a corporation. If you're doing self-employment, whatever money you made in that business gets added to your bottom line as to how much money you made. So if you have a full-time or a part-time job along with your self-employment business, the two of those incomes get combined on your tax return. Then you get taxed on the amount of money that you made for the year. So if you have a full-time job, your salary plus how much you have made after expenses combines into one. Whereas on a corporation now, you get taxed twice. So you get taxed as an individual, and then your corporation gets taxed. So that's how you get taxed twice. And with the corporation, any money that's made in the corporation, you would pay yourself as an employee, or you pay yourself as a shareholder. You have two options. So that's a way to reduce how much you pay in the corporation. However, if you leave the money in the corporation did make money, then whatever is left over, that's going to be taxed. The great thing about a corporation is it has a standard rate that they charge you for taxes. Whereas on the personal side, it's a tier system. So I believe there's 5 tiers that they can charge you, or that they charge you for taxes. So if you make like 200,000, you're being taxed at the highest tax bracket. Whereas the corporation just has one flat tax bracket. So now you're maybe asking, but what about a sole proprietorship? Because it's a sole proprietorship, your income gets added to whatever you made for the year. So if you made 100,000 in your sole proprietorship after expenses, you're gonna get taxed at the highest tax bracket. Another thing to note is if you're making that much, then it's time to switch over to a corporation. What else is there? So those are a few things that you need to know when it comes to your taxes or deductions for your business. Especially with the new digital space, a lot of us are not, well, not to say a lot of us, but I'm noticing many people do not know what they can claim on their tax return. Even if you have apps where you have a monthly subscription, your laptop, if you just recently bought it, those are all write-offs within your business. Like this t-shirt, like because this is my brand, I can write this t-shirt off because it's a part of my uniform to deliver this video. So I want to let you guys know that I'm going to be adding a segment called Make Sure It's Deductible. I'm going to like a little segment where I just talk about something that you probably didn't know that you can deduct off of from your business. So that's a segment that I'm going to be adding to the show for you guys. And yeah, that's pretty much wraps up today. I don't want to say too much more. I think this was a pretty good introduction to running your business. I'm going to be talking about different things throughout the week that I noticed that we need to be doing within our business. So having proper business structure. What else is there? The cost to start your business, the cost, like how to calculate the starting cost, and how to keep the current cost, or the cost to run your business, the cost to maintain your business. I'm going to talk some more about write-offs and deductions, the benefits of running a business, your systems within your business, your goals, and how to scale. So that's going to pretty much be what this week's going to be about. And thank you for tuning in to another episode of the Learn Podcast, where first we learn, then we drop the L, and then we earn. Make sure to subscribe so you can stay up to date with the new podcast that I drop. And because you stayed to the end, I just want to let you know I have officially released the weekly Wealth Builders newsletter. So make sure you click in the link or click in the description to join the weekly Wealth Builders newsletter. And I'll see you on tomorrow's video.